Stocks popped today as the Fed teetered toward a rate cut and money raced out of megatech into overlooked pockets. Yet beneath the rally lie cracks in the AI trade and the broader market's dependence on policy. Let's dive into what moved today and what to lock in heading into the holiday week. Welcome back to Market Close Daily, after the bell, before tomorrow. Every day we unpack the major index moves, earnings surprises, Fed/macro signals, sector rotation, smart money shifts, and the names both traders and long-term investors need to watch. Everything here is based on market close data and meticulously verified so you can trade or invest with confidence. Closing snapshot. U.S. stocks finished higher across the board. The S&P 500 gained roughly 0.9%, to around 6,765.9. The Dow Jones Industrial Average climbed about 1.4% to near 47,112, and the Nasdaq Composite rose around 0.7%, finishing near 23,025. Small-cap stocks outperformed, with the Russell 2000 up about 2.1%. While the upside is welcome, this rally felt more about relief than conviction. Weak economic data plus heightened odds of a December rate cut doled out the fire hose of liquidity, but the leadership remains narrow and the valuation demands remain high. Macro and the Fed. Today's rally leaned heavily on signals from the Federal Reserve and the macro patch. Softer economic print and commentary lifted hopes of a rate cut in December, odds now near the low 80% range. The key takeaway? It's not certainty, but it's clearly on the table. While the labor market is showing signs of softness, inflation remains sticky. That places the Fed between a rock and a dovish hard place, and markets are essentially betting the Fed will pick the easier path. Be cautious. If any upcoming data surprises to the upside, inflation, wages, this narrative could reverse fast. Today's strength is built on hope, not proof. Tech, AI, and growth. Tech and AI were a fascinating study in contrast today. On one hand, the blockbuster names are under pressure. Nvidia Corporation fell sharply amid reports that Meta Platforms may switch to buying AI chips from Alphabet Inc., a blow to Nvidia's dominance. On the other side, tech broadly rallied thanks to multiple segments and a broader base of participation. That suggests today was less tech is king and more policy king, with tech just along for the ride. Sector roundup. Sector-wise, this was a mixed but telling session. Communications, healthcare, and materials led the way upward, while classic growth AI heavyweights lagged. Value and cyclical sectors got a lift, especially as year-over-year expectations shift on rate cuts and inflation. Retail and consumer were especially strong. Energy and raw materials remain under pressure. Oil pulled back amid growth concerns, and gold held near record highs as investors hedge into the year-end. Deeper cuts and names to watch. For traders, keep an eye on Nvidia. The headline drop and competing chip supplier news created a tradable setup. Watch for volume spikes and price action around the $700 to $720 range, or your synthetic equivalent, depending on your ticker mapping. For long-term investors, Alphabet looks interesting, with Meta's chip shift potentially validating Google's cloud/AI ecosystem. This may mark the rotation pivot away from hardware-centric names toward platform plays, worth a closer look to build your base layer. Crypto and metals check. In crypto, Bitcoin remained under pressure despite equity strength. The risk-on move in stocks didn't fully extend into digital assets, underscoring the divergence. In metals, gold remains elevated near $4,000 per ounce as inflation and geopolitics persist. Oil pulled back slightly, something to watch for energy equities, but for now, it's a tailwind for consumers. Smart money and structural moves. Smart money continues to reposition. Long-duration capital is quietly leaning into infrastructure, AI-adjacent platforms, and value while trimming overexposed hardware and crowded tech. Today's market gave it a reason. Remember, the largest value creation over the next decade may not be in the hot chip names of this week, but in the infrastructure enabling the AI wave, which is where we're seeing meaningful commitments. What to watch tomorrow? Heading into the holiday-shortened week, keep an eye on 1. New inflation and PPI prints. Any surprise there could shift the Fed path again. 2. Retail earnings and consumer metrics. Vigor or weakness here will impact the cyclicals that rallied today. 3. Tech/AI leadership. As Nvidia's issues surface, does money shift into platforms, Alphabet, Microsoft, or away from the trade entirely? That's your Market Close Daily for Tuesday, November 25th, 2025. We saw a policy-driven rebound, a subtle sector shift, tech showing cracks even amid a broader up-day, and multiple trade setups emerging. If you found this helpful, stay tuned for our next breakdown. Manage your risk, stay nimble, and I'll see you after the bell before tomorrow.